things that affect you in condo and your homeowners association, some of the questions you may have, some of the issues you may have that you wonder about, maybe want to know, can they do that? Why did they do that? So we're here to help with some of those. Uh, it is a call-in show. It's for your benefit. So if you want to call, feel free. 220-9788, 220-WSTU is the number in the studio. That's a good number to keep handy because that number is useful for a lot of other shows here on WSTU and is the number to the studio. But for this morning show, 220-9788, 220-WSTU is the number to call. When you call in, there's a couple things that we ask. It's not real difficult, but first of all, we need something to call you instead of hey you. So you can give us a name, but it doesn't have to be your name. We don't care. We won't trace you down and check you out. Well, Mike might, but I try to rein him in every now and then. You know, he's like that. But we also don't need your association name, and in particular, the reason for that is that many of the problems that exist in associations are somewhat similar, but not exactly the same. And so if somebody hears another association, it might get them tune out a little bit. They might say, oh, that's not me. But it may be very close to theirs or the same problem as theirs. So it's, we kind of keep it general. It also doesn't skew us because we have clients. And so it might be one of our clients and we don't need to know that. So the other thing that we always mention is that we're going to give you the best possible answer we can based on the law, the statutes, based on typical practices and other things. But we don't have your documents. And so we're going to give you an answer based on what you say or, what you interpret your documents as. But as we always say, those documents can get confusing and sometimes they can be even conflicting, depending upon how they've been amended over the years or whatever. So that's confusing. So if you've got a situation where you really need to potentially go to court on, or you've got some, then you need to call somebody like Peter Mullengarden, who's the attorney on the show here, and give him a call and talk to him directly, let him look at your documents and then get an answer that you can feel more comfortable with. He can help you tell you where you would stand if you took the case further. So those are the only things that we caution on. But otherwise, everything else is free game. My name is Mark Breckbill. I'm a CPA here locally and also a licensed community association manager. Been dealing with the condos and HOAs for 25 years or so, and am also on this the Florida Institute of CPA's CIRA committee. That's Common Interest Realty Association. That's our condo and HOA group for the state. We do a lot of education and also we do a lot of lobbying, but a lot of education primarily in our CIRA group. And I teach some of the tax and audit classes. So in those sections. So that's my background. But the person that makes the show for us is Peter Mullengarden. Peter's our attorney. He's been practicing this type of law, and in particular on this side of the table, in other words, for associations, for probably, 35, 40 years or so. And has got quite a bit of experience in this area. So he's the one you want to ask a question about when it comes to any kind of legal matter. So good morning, Peter. How you doing?
Good morning, Mark. I'm well. How are you?
Good. Yeah, doing pretty good this morning. Florida managed to squeak by, and so I'm good with that. And so,
okay.
But otherwise, yeah, everything's pretty good. I know. I know, Peter. You. One of the things we don't, just kind of as a note for our listeners that we haven't talked about, is the Florida Bar finally got around to having a designation for CIRA people, right? For people that deal in condos, and so now we can actually say, what are we allowed to say? You're an expert?
Yeah. Well, actually, I am a board certified specialist in condominium and planned development law.
Cool. Yeah.
Kind of a long title. So anyway,
now does that take into?
I am board certified. I should be certified as something, but anyway.
Yeah. You
Some
were.
people say I should be certified for other reasons.
That's
anyway.
right. You were certified a long time ago, but
Mm-hmm.
what? Now that is that certification. That's for that's also for the attorneys that work with developers and all of that kind of thing too.
Yeah, it's basically it. Yeah, it's all the attorneys who do the association, either on the association side or on the developer side, which is more the development, aspect of it, development law, and even for those attorneys who work for owners as more than they work for associations. So because there is a group that also represents owners more than they do associations. I represent more associations, quite frankly, than I do owners.
Right.
So yeah, it's basically that's the broad spectrum of the community association practice. Whether you work in the developer side, the association side, or the unit owner. And I shouldn't say side because it makes it sound like a war or something. But
it isn't.
From that perspective.
I don't know that
no.
I don't know that you could call it a war, but the ceasefire in Syria is looking to be a lot less contentious.
Contentious, yeah. Well, it's a lot shorter anyway.
That's right.
But so they started that certification. I guess it was a year or 2 years ago, and I, because I've been doing this such a long time, was able to, in essence, kind of wave in younger practitioners. There's an exam you take. So.
Yeah, that's.
But yes, I mean, it took a long time, because the bar has various practice areas where you can be board certified, whether it's real estate, trial, bankruptcy,
state trust,
whatever, trust and estates. There's various practice groups or practice areas where you can reach the board certification level. So.
I look for the CPAs to start doing that pretty shortly, something similar, because we have a large number of, not a large, but we have a fairly strong group of specialists in the CIRA industry. Some people spend a lot of time with the associations, and all of their practices, from everything from accounting and audit to tax to budgets to reserves to other things. And so I'm looking for us to follow suit with that, and probably do something ourselves to recognize, because one of the problems that associations have is they have to have an audit or a review, and frankly, they don't have any idea whether you do one association or do 100 associations. Mm-hmm. And it certainly makes a whole lot of difference which one of those you are, because part of what we do in auditing, and that's probably the most mysterious for people, is what do you do when you audit? First of all, we don't look at every transaction or anywhere near it. What we do is use our knowledge of the industry and our experience to look for items that are out of the ordinary or unusual, and we investigate and look to see if they're legitimate. But of course, the less experience you have, the less things that look out of the ordinary or unusual, because you don't know what that is. So, for those of you that are having audits done, it's much better to have somebody do them who's got a lot of experience in it. Now, the flip side of that is that those guys are pretty busy, in February, March, and April. So sometimes it's hard to get somebody to do that kind of work, or they're going to be a little more expensive because they're doing it at overtime rates and things like that. So anyway, just as a side note, but yeah, Peter, that's a great designation. It's finally, it's a good thing that finally the bar did that, because you guys that work in the industry have worked really hard. It is a specialized industry, and we've talked before on the air about how many different areas of the law that you have to know to be able to practice in this area, or to practice well in this area. So, and I've dealt with some attorneys periodically that were new to the industry, and it's tough. Not only, is it tough that they don't know all the laws a lot of times just right off the bat. They have to go research things. So, and that's something I'll mention just in favor of those that are experienced like Peter. It's first of all, they're not substantially more expensive. In many cases, they're not more expensive at all. But the thing is that in Peter's case, for example, you can ask him a question, and he pretty much knows exactly where to look. He knows what case law in general is going to be significant. He may have to go and look up a couple things to see if things have changed. But in general, he knows right away what the issues are, what the courts have ruled, probably what the various district courts have ruled. So, but another attorney that's fairly new to the industry, first of all, they have to go look up the statute. They have to find out in the statute where it's important. They probably may have to go to the rules. They may have to go to, and then they have to go look up, mediation cases or arbitration cases or other things to determine where, if it's not clear where the courts are now, and those kind of things. So, so it may take them 3 or 4 or 5 hours of additional research. Now, if they're billing you for that, and you've got a guy like Peter who already knows all of that, ultimately it's going to be cheaper, even if his hourly rate is higher. So it's kind of and we struggle with that as professionals because, we have a lot of experience and knowledge and that type of thing. And, it comes there. So a lot of times we can be cheaper because we don't have to do as much research. We already have that base level of knowledge that we can work off of. And so, we're just moving beyond that. The flip side of that, Peter, is I was working on a project for a client, and it was a situation where the client, not a SIRA deal, but the client was, but I've got one right now in the SIRA industry that similar situation. But I had a situation with a client, and we were looking at the situation, and because of some experience I had in other industries, I brought some of that experience to the table on this, and saved the individual roughly about $15 million in taxes. And so I suggested,
you should work out a contingency.
Well, see, that's the thing, and you can't work on the front end on contingency, unfortunately. You can on an audit, but you can't. But I can do consulting work, and I can do it on a percentage of or some flat fee basis, and I just can't tie it to the tax savings. But I could do it on some sort of flat fee basis. And so, I was suggesting, and the client says, well, I think you should do it per hour. And I'm thinking, well, that was like 30 minutes. I should have been paid for those 35 years worth of experience that it took to come up with that 30-minute answer.
You have to value build that.
That's right. You got to value build that. But anyway, so it's interesting because I've got an association now that I just got an email on this last week from a friend of mine, a fellow CPA down in Fort Lauderdale. And it's an association that's got an issue with I think it's a cell tower situation, and they've structured it as a lease instead of an easement. They're trying to figure out, how to get rid of how to avoid a substantial amount of tax. So they sent it my way. Those are the things I do. So I'll restructure it as an easement instead of a lease, and they'll save, probably somewhere around $200,000 in taxes. But it's one of those kind of things that, how long is that going to take me? Well, I've done it about a half a dozen times, so it's not going to take me that long. But certainly, the client gets the benefit of that to some degree, no matter what. But so enough about of those things. Mention again 220-9788, 220-WSTU. And number in the studio if you've got a question, and feel free to call us up and ask whatever you want to ask. Peter, what I have been I just finished my peer review. For those that don't know what that is, CPAs are subject every 3 years or so. We're subject to an audit by our peers. They come in and review what we did in our files and make sure we followed, all of our guidelines and our rules and regulations. And it's always interesting because the industry the CPA industry is changing to some degree, and we have issues with what happens with us is a lot of the big audit philosophy tends to creep down, and so they want us to apply auditing techniques and auditing principles and auditing not auditing principles but auditing techniques that you might apply to General Motors, and it just really doesn't make sense on mom and pop or the small condo. Um, First of all, because General Motors audit is probably about $4 million a year, so I doubt most of my associations want to pay that kind of money. But anyway, it's but it was interesting because they are hitting on a few topics for us, and one of the things that they're starting to get kind of hitting it more and more on these peer reviews is what's called risk assessment, and that's looking at the risks in the association, and that those could be internal control risks, and they could be entity risks, they could be account risks. For example, there's more risk, generally inherent risk. There's more risk in a bank account of a mistake or fraud or whatever than there is in your fixed asset account. It's unlikely that somebody's going to go out and steal your dock, but that's not to say they couldn't charge somebody and keep the money. Things like that they're not supposed to be doing. But anyway, so that seems to be the focus. But there is a lot of focus on and so what they're looking at on us is internal controls. On most condos, when we do an audit of a condo, we have to evaluate their internal controls, but we don't have to test them because it's not cost effective. They're so small that the benefit of testing their internal controls doesn't reduce our audit work any, and so therefore it doesn't save the client any money. It just costs the client money. But the AICPA is on us now through peer review to be looking closer at internal controls and evaluating risk. If we don't test internal controls, we have to evaluate the risk in internal controls at high, which then means you have to test more, you have to do more. There's mitigating risks which we can use to make that lower in the condo industry, but it's a factor. It's an effect that's happening right now on in the condo and HOA industry. Is it's going to make some changes. It's probably going to push audit costs up eventually. For the firms that have been doing it the right way for a long time, it's not going to make much of a difference. But it is pushing costs up. Anytime that they start hitting on these topics, we have to start documenting them better. And that's what usually get hit up on these peer reviews. I know on a couple of the things, what I'm going to get probably dinged on is documentation. We did the work, but it wasn't easy to see how we did the work, or the documentation wasn't the way they wanted to see it or something. So it's kind of an interesting situation, that CPAs are subject to this, and we're subject to the peer review. It's also interesting that I had one type of an audit. I had a HUD audit, which is for a for-profit company, and if you have one of those, you have to have that audit has to be peer reviewed. Specifically, it has to be selected for peer review, and that is it's crazy the amount of requirements on some of that kind of thing, and just because in that industry, they almost treat you like you're like I said, General Motors or something, like an SEC client. So we got to be careful for our condos and HOAs and our condo and HOA boards. They first of all they should do and need to do a better job of internal control. They need to spend a little money to make sure that they have qualified accounting people and bookkeeping people, and that they're having the work done that's supposed to be done. That doesn't always mean you need to do an audit, because audits don't find fraud. It's just that you need to pay attention to how internally you approve bills, and you who has access to your bank accounts and things like that, so that we don't have problems. But one of the biggest problems we have in that area, and then I'll get off the topic because nobody's interested, but is that because it bores me even. But the funny thing is, Peter, do you know that in from an accounting standpoint, from an audit standpoint, um, we're supposed to uh, the the person that is internally responsible in the company in the condo association, who's the contact person, the person that's responsible for the audit, for signing the representation letters and being responsible for the accounting. That person who's responsible for the accounting and or the treasurer, whatever, uh, and they have to or are supposed to be able, and who's responsible for signing off on the tax return, believe it or not, either one of those things. The person is supposed to be able to understand um, and be able to evaluate whether we, as a CPA firm, did those things correctly. And technically, they're supposed to be able to prepare the financial statements. The financial statements that we give an audit on or review are the client's financial statements. And technically, they're supposed to be able to prepare those. We can't sign off if we can prepare the statements, but we can't sign off unless we believe that the client was at least capable of understanding all of the things we did to prepare the statements and why we did them. They don't have to know it, but if we explain it all to them, they have to understand why we do that. Now, think about it a minute. In most of your associations, how many people, if any, even CPAs that are on the board, for example, that don't have CIRA experience, they might be able to get up to speed on some of that, but very few have that kind of experience. And yet, as an industry, we're supposed to be, as CPAs, we're supposed to be signing off on the fact that they have that kind of capability. It was funny in the peer review, there's a question about if you do any kind of non-attest, non-audit type services, which is typically the tax return, you're supposed to have identified the person in the company that's responsible for that tax return, and you're supposed to, and that person is supposed to be able to evaluate whether you've done the tax return correctly and you've given them the correct advice. And I thought about that, and I've been teaching the CIRA tax class for a number of years in our CIRA conference, and there are CPAs from all over the United States that don't know the answers to, don't know how to do those things or why, and are relying on other people to give them information. And yet we expect some volunteer treasurer in a condo association to be able to understand all of that. Just seems a little ludicrous to me. It's kind of a real world versus, ivory tower type concept. But anyway.
Yeah, I'm not sure. Yeah, I'm not sure what the solution to that is. I mean,
well, you want me to tell you what they think the solution is?
Because the reality is, you're right. I mean, you're going to have, most are not going to be able to understand the intricacies and technical aspects of all that. I don't know. What do you think
what they tell you? And I've done this once in a situation that was relatively involved. The association has to go out and hire another CPA to actually prepare their financial statements on their behalf. That's not audit work. That's not a test work. They're just preparing the financial statements.
Mm-hmm.
And then they have to, or if they don't prepare the financials, they have to hire them to evaluate whether the financials are proper.
Yeah.
I've had that situation. Here's where I've had the situation. We're also not allowed to prepare the books. If we're auditing the books, we can't do the,
right. You have to be independent. Yeah.
Right. Now we could technically do the bookkeeping, but if that rises to the level of making decisions, like, the client doesn't know what a debit or credit is, and they don't know how to post it. And so if we give them adjustments, they don't know what to do with them. If it rises to that level that they don't have somebody that understands that, then we're going beyond accounting and bookkeeping into a management situation. We're actually making the decision where the entry
Right.
goes and how it's going. So I've had that situation where the bookkeeping was such that they didn't have a bookkeeper, or the bookkeeper they had really didn't, was just a basic bookkeeper, didn't understand debits and credits, and we had a complicated, like a hurricane situation, and so we actually brought somebody outside in to clean up their books before we audited them, and that was, because they wouldn't have been capable of making all the adjustments. So, we've had those kind of things, but it's expensive. I mean, yeah, your typical, condo audit, you're probably talking $4,000, and HOA audit probably a little less than that, and that's on the cheap side because these things get done. For example, a similar size nonprofit to a condo or an HOA, a similar size nonprofit would run, instead of four, would probably run about 8,000. Almost twice, usually twice, because because they're a little more complicated in terms of the accounting, especially the revenue. But so anyway, it's interesting where we are with, we've got these small associations that are run by volunteers who are not even, may not even have a business background, and yet we expect them to do so many things. So I'm always amazed at board members and all of the things that they are capable of doing, and all of the work they put in, because you got to love it, because it's hard work. I mean, there's a lot of complicated things that a lot of people have never seen before, even if they've owned a business, so it's an interesting environment to work in. So it's a good thing that the bar has finally recognized that it takes a certain special, certain specialty or some knowledge for an attorney to work in this area. It's not just, this is what the new guy's going to do. Although I think probably, Peter, when you started, same thing, these were the jobs the new guy did. In the old days when I started the tax side of nonprofits and condos and HOAs, we let the new person do it because there was no risk. There was nobody, there really weren't any taxes that usually were due. There was no big tax issues that came up. There was, on the nonprofit side, nobody was looking at it, and they were nonprofit. It was just a charity, and nowadays, uh, condo or nonprofit tax returns are some of the most expensive tax returns that we do. They can be, because at least as far as base returns, and even the condo returns are getting more complicated. So it's interesting what's going on with where we're at. Let's I'll change the subject a little bit, because I know how exciting accounting and tax is. Let's get into some legal issues maybe that people will find a little more interesting. Again, 220-9788, 220-WSTU. If you have a question about something, audit, tax, legal, on the subject, off the subject, feel free to call. We'll get you on the air and get your question answered. But I know we were talking last week about, we're coming to that time of the year when people are starting to come in. We got elections coming up, and we were going over some of the election process, some of the notice requirement, because as you pointed out, it's really almost that time when the notices have to go out, the elections are going to be held, and all of that. I know a lot of associations have 12/31 year ends. They have maybe March 31st year ends. But even with 12/31 year ends, a lot of them are not having their annual meeting until February, or somewhere shortly after the end of the year. They're usually waiting for their financials to be done, or to get some results. Do you find that I'm getting I'm getting entities that are starting to look at changing their year end? They're starting to ask me, why can't we go to December 31st, the ones that were off year ends? And for those of you out there that wonder why your year end is March or February, or it's probably because your CPA didn't want to have to do all that work during tax season, so they told you to use a year end that didn't know. It's supposed to be a year. It's supposed to coincide with the slowest part of your year, when you kind of have the least activity. It's the end of your business cycle. So if you looked at if you looked at your year as a business cycle, for most associations, you know, they actually um, probably sometime toward the end of the spring here, they start winding down as people are the the association might be relatively active in terms of people that are there still, but what's happening is, there's not a lot of construction. There's not a lot of repair stuff that's taking place. The landscaping stuff is being done, but all of the sprucing up landscaping was done prior to the time the season started. So what's happening is sometime usually in March or April, uh, all of that slows down, and then it ramps up as soon as everybody leaves. It ramps up again, and people start doing the tree trimming and the landscape work and the repairs and the reserve items and the roofs and the balconies and all those things that need to be done, and they try to get them done really prior to the time that the major portion of hurricane season hits. And then you get a little lull, and then they build up to the budget, and the budget is, there's activity there and assessments, and then boom, like I said, everybody comes down, everybody has a good time, and as people leave, it winds back down. So most associations tend, from a business cycle, their year end here in Florida would tend to be somewhere close to, somewhere close to uh, March or somewhere in that range. Now, a lot of people want to have their elections and everything before people get down for the season. They don't want to wait till the last minute. So some of the associations that have the 12/31 year ends, they have an election of officers really before the year. They want to set a budget before the new officers come in, so that they're not bound by the old budget. And so, a lot of times there's people that want to get it done early. They want to, get all of that stuff done, so they can meet with people and talk about some of the things that they're going to do and want to get done, and what the members want to get done before they leave to go back up north, or while they're back up north. So so from a practical standpoint, the government wants you to have a year end that's consistent with your business cycle, but if not, they want 12/31. They want a calendar year end typically, which of course makes it difficult, because now all your work has got to be done in the season. So that in the tax season, the audit season, and everything else. So it makes it a little more complicated. But it is good for a lot of associations, because it's a nice time to start planning fresh for the new year. You got 12 months coming up. The members get down, they get a chance to be able to have an election, or get their budget done, or whatever they're trying to do. Hopefully a little bit of the both, so that come January they got new budget numbers, and they're ready to go. But I would imagine, Peter, you probably find most of your clients are December year ends. Is that pretty much?
I would say most, yes, are calendar year. I remember a few years ago we had, I won't say a lot, but several associations actually changed to a June-July fiscal year.
A lot of the country
in the
clubs,
summer. So
a lot of the country clubs are June, July, August, September year ends, especially June year ends. We have a lot of the big country, because it makes sense. That's here in Florida. That's when the people are pretty much, gone. It's the slower time of the year, so they, it kind of winds down in the middle in June, and then it starts cranking up again as they're getting ready for the season. In October, November, they start, so they're doing all of their groundskeeping work and all of their seasonal work, and all of that's being done, after June 30th typically, or might get started, but it's being done then. And then a lot of times the HOAs will go with with a lot of these clubs dominate what happens in the HOAs, because the people are there for the club. So a lot of times the HOA year ends will be consistent with the club year ends.
Yeah, they changed it just for the reason that that was slow, and they didn't have to. All the CPAs are busy at the end of the year, and so you're right. I mean, so for them it was easier to get their financial statements or the year-end statement done at a slow time for the CPAs, as opposed to when everyone is trying to get it done. And one thing, most bylaws that I've read, may establish that the fiscal year is whatever, usually a calendar year. But most bylaws will then also have language saying, but it can be changed by the board from time to time. So it's typically something, you have to check your bylaws. If you have a set of bylaws where it's set in stone, you may have to amend the bylaws with an owner vote. But typically it's a provision where the board has the ability to change that. You have to look at the language just to make sure. But again, typically it is a board determination, so it just simply has to be done in a board meeting rather than an owner vote. If you're thinking about changing your annual meeting from a calendar year to a March, April, or June, July, again, double check. But so it's not that usually it's not that difficult to make the change.
Yeah, and you should look at that. I mean, you should do what's best and what's easiest and what works the best for your association. A lot of people think they're stuck with December year ends. They're not. You can change and go to a fiscal year end, and typically for most entities, if you're changing from a December 31st year end to a fiscal year end, um, that can be that can be a little bit more cumbersome or time consuming from a IRS standpoint, but it's not for condos and HOAs because there's corporations taxed as they're C corporations, they call them. They're taxed as a regular corporation. They're not pass-through entities. They don't have to abide by the year end of their owners. They're not required to do that. So therefore, they can switch pretty easily, and as long as there's as long as they pay the tax on the short period or whatever, they can do that. And so it's kind of interesting that is that is an option that a lot of associations don't take advantage of. For example, a lot of times it would be easier, like I say, especially for some of the really seasonal associations that are out on the island and things like that. It starts after April 15th, March 31st, April 15th. Now, you always want to have a year end to be the end of a month. Actually, if you're having a turnover audit, it also should be the end of the month. If having a turnover audit in the middle of the month causes a lot of issues from an accounting standpoint and a general turnover standpoint, because a business isn't used to accumulating information as of the 23rd of the month or the 21st of the month. So their books aren't accurate as of that date. They are by December 31st when they've got a bank statement they can reconcile. But, you start doing weird cutoffs and you start getting into some additional costs. But like I said, with most associations, when you start looking at it, these seasonal ones, having a year end in let's say April 30th, may make some sense, or because then they can do their budget before then, they can elect their new officers before then, and they can do it during the season when people are there. And so that gives the members a chance to get down there and figure out what's going on and ask some questions and see that things are going good and say, hey, I like the guys that are here, let's keep going. Or let's spend money on this next year, let's not. You get a lot better, you get a lot more input than if it's done in August when nobody's there, or like I say, or you elect your officers in February or something, and they got to deal with the budget that's already in place. Some of those kind of things. Usually when you've got a new board coming in, they're going to want to make some changes, and that's going to affect the budget. So if if I was a board member coming in after the budget's been set, I'm probably going to look at the budget and say, see if it's accurate or not. May have to have another budget meeting, which you can do, but a lot of people don't like that. So anyway, there's some things there that you might want to look at and talk about changing at year end. And like Peter said, unless you've got some documents that kind of freeze that and require a member vote to change it, which even then may not be that big a deal. But a lot of times the bylaws, are flexible enough that they don't, you can change a year. Typically, most of the things say, the association will adopt a year end of December 31st or or any other
It'll say
date.
as determined by the board.
Yeah, as determined
Something
by the
like
board,
that.
or any date determined by the decision of the board, or something like that. So you've got some flexibility there. Um, but so those are some of the things I think that associations may want to look at. It. I will tell you, from a practical standpoint, if you do have a year end that's consistent with the season, so let's say you've got a April 30th year end, for example, or March 31st, but either one of those, it means that a lot of your work, your tax work, your financial statement work, your audits or reviews, all of that, even some other things that you are going to have done, are going to be done in the summer, which is slower for everybody. And so therefore it's less costly. If I'm doing an audit in March, my people are working premium hours. They've got so much work to do that they're working overtime, and they're not wanting to be paid minimum wage. So I've got to pay them a decent amount of money to do that work, and the more overtime they're working, the more they expect to be paid. So in our firm, at least, we give a 20% discount if that work's done out of season. And 20% is a big number in an audit area. If you're at a $5,000 audit, you're a $4,000 audit if you just can do it after April 30th. So, and a lot of the times you can do that even without, you can do that even without having to, change any kind of things or delay any. You can get it done within the normal time that the state allows, basically 120 days. If you've got a December 31st year and you want to do the work out of season, then we have to go through some gyrations to be able to do that and still stay legal, assuming your documents allow it. So those are some of the things that associations need to look at. But and the other thing I would say, just as we're leaving this topic, the other thing is important to understand is that a lot of things in the industry get billed per door. So, it's $4 a unit, $6 a unit, whatever. Those numbers are probably reasonably accurate in a condominium association that is of a certain size. If you've got 100 units or more, somewhere in that range, then a price per unit is okay, because 100 is big enough to spread the overhead over, over a number of units and make sense. So let's say you're paying $4 a unit for bookkeeping, for example, $4 a unit. Well, 100 units, $400 a month. That's not a bad number. That's probably what it costs, maybe even a little on the high side. If you've got 10 units, you're not going to get the work done for $40. So there's a base level, and then there's some above that. The other thing is there's a big difference between condos and HOAs. I mean, frankly, with all of the restrictions and the reserve items and the common property, condo audits are much more, because of the legality of condos versus HOAs. Condo audits are much more difficult. Condo reviews are much more difficult. So they should be a little bit higher. In other words, if you're in an HOA, and you've got, let's say, 400 units in your HOA, or let's say 400 or 500 units in your HOA, the cost of that audit is probably going to be the same as a 100-unit audit in a condo association. It doesn't go up that much because you got 500 units or 1,000 units, whereas a 1,000-unit or 500-unit condo association is a pretty large condo association, and they're going to have a lot of issues, potentially multi-condominiums and other kinds of things that make them a little more difficult. So that's something to keep in mind too. If you're in an HOA, you should be able to negotiate a little better price than you would in a if you were in a condo association of the same size. So just keep those in mind. And so otherwise, Peter, I know we talked a little bit about elections. we've talked a little bit. I know budget's coming up here. A lot of people are working on budgets right now and getting those ready to go. What kind of issues have you had come up so far? Anything interesting that's popping up that you kind of haven't seen for a while?
Recently, nothing that unusual. Um, you're right. It is the budget season, annual meeting season. Um, we always have the emotional support animal requests.
Yeah.
But in terms of, I haven't really seen any. Well, I guess one question that seems to be coming up a little bit more um, than in the past is actually dealing with smoking. Prohibiting smoking in units, in the common areas, in the common elements, on the balconies, things like that. Airbnb is a big topic, and the short-term rentals. In terms of associations trying to combat the Airbnb or the VRBOs and the other platforms that people are doing short-term rentals through. So that seems to be ongoing and picking up as more and more owners, quite frankly, are using these platforms to rent their units, and sometimes it's difficult in terms of stopping it, especially when they're claiming they're not tenants.
Yeah,
they're guests. This, they're that, they're the other thing, and they're there for 2 days and gone, or 3 days. So
that's the trouble. By the time you act on it, they've already, by the time you've acted on it, they've already left. And then, a lot of the courts don't want to deal with these kind of things when, when they're small and they're over. It's like, it's one thing if you got somebody that's going to be in there for 3 months or something, but that's not typically the way it works on an Airbnb. So, they're in there for shorter periods of time.
Well, we had one district court. Let me see the first or the second. It could have been the fifth. That earlier this year, they decided that this was an appellate decision that I think I mentioned this on the air before, that the Airbnb was not a commercial use; it was a residential use, which kind of took me aback. But they were going on the premise that people are living there and eating there and sleeping there, and therefore they're living there. Even though I would think a short-term rental like that is more of a commercial than a residential, but they were focusing on the those aspects of it as opposed to the the short-term rental business aspect of it. Therefore, so if you want to stop it, just saying, well, we're going to stop it by saying there's no commercial use, that might not be sufficient. You have to stop it on, or try to stop it on other reasons, like if the rentals aren't approved, they're not for the right length, they're too frequent. If your documents again limit the frequency and the duration of the rentals to not less than, let's say, once a year, twice a year, for 6 months, something like that. So, but even then, there's still the enforcement aspect. I'm not saying that they can't be stopped. It's just it is an increasing problem.
Well, it is interesting that originally the Airbnb concept was a home sharing concept. I have my house, you have your house. Let's exchange. You come take a vacation at my house, I'll come take a vacation at your house, and we'll do it that way. And then, of course, then it blew up after that into really a more of a hotel thing. But it's funny because all of these disruptive industries, and Airbnb is one of them, and you've got Uber and Lyft and all those in the transportation industry. Is Uber and Lyft aren't they cabs? I mean, but no, at least that's what the argument is, that they don't need to be regulated like taxis do, and all of those kind of things, and that they're independent contractors and they're out just doing their own thing with their own car. It's ride sharing. We got home sharing, we got ride sharing. But anyway, it's kind of interesting because that we were talking. I was talking to somebody the other day, and I think just from a practical standpoint, housing has changed. Is changing, has changed. I think that more and more people aren't buying homes right away.
Exactly. I mean, we don't have that much time to go into it, but lecture that I may have mentioned something here, I don't know, the lecture that I went to a few weeks ago, one big development company, what they're looking into now is co-living. Okay.
Yeah.
I.e., roommates, boarding room house type things,
Yeah.
where because rents are so expensive, and the millennials aren't really into buying. Okay, like a lot of them, and the rents are so expensive. So now you have a 3-bedroom unit, let's say, and you have 1 or 2 people in 1 bedroom and bathroom, and another 1 bedroom. It's almost like dorms.
Well,
basically,
I actually,
which a lot of college towns do college town apartments are like that, right? I mean, everyone has their own room and bathroom, and they all share the kitchen, and that's what's coming into the non-college living arrangements. Just for for not.
It's funny,
it's called
Peter.
co-living.
Right. It's funny, Peter. I actually think, and I developed when I was looking at developing some units downtown here in Stewart, and I designed some units. And what I designed was what I think ultimately will happen. There were let's say a 2,250 square foot unit. That's huge, right? That's a big condo.
Mm-hmm.
But it had lockouts like a timeshare. So
exactly.
There was a 500 square foot segment, a 750 square foot segment, and 1,000 square foot segment. And so you could mix and match based on was there. So you had a 1,000 square foot 2-bedroom and a 750 square foot 1-bedroom and a 500 square foot flat.
And that's what's coming.
Yeah, I think it is. I mean, because think about it, even for somebody, let's say you're a caregiver for your parents. You put them in the unit in the middle. You live in the bigger unit on one side. Maybe you have an outside caregiver that lives in the flat on the other side, and the parents get taken care of. So anyway, I think there's a change, and that'll affect us in our condos and HOAs, and we could probably talk about that next week, because we're always looking for something to talk about. And we had a caller, but we missed it. But hopefully you'll join us again next week, because we're here every Monday from 9 to 10 o'clock on WSTU, always trying to get you some information. WSTU Digital 1450. We are Martin County's very, 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 very old station.